Hi, my name is Elliott Gue and I'm the editor of the Energy Strategist. Today is Thursday. I want to talk a little bit about the natural gas inventory report, which was released at 10:30 this morning. Expectations were for about a 30 BCF, billion cubic foot build in U.S. natural gas inventories. What we saw was a little less than that, about 24 BCF build. So that was less than expected build, which tends to be kind of bullish for natural gas. More generally right now, what we see is inventories are at or slightly below average, below the 5-year average, which tends to be bullish for gas. This is the first time we've seen inventories below average, really, since for about 2 years, a little over 2 years. So generally, it's a pretty bullish picture for natural gas. We are in the heart of what's called shoulder season for gas market right now. What that means is that the winter heating season is basically over. Typically that wraps up in the first week of April, even sometimes in late March. But we're not really into the heat of the summer yet. So in this summer, if it's a hot summer, you could see gas inventories again see heavy demand because of people turning on their air conditioners. But the period from now until we get into the summer months in June, July, August is really kind of a quiet period in terms of natural gas demand. Doesn't necessarily mean natural gas prices can't rise. If gas inventories continue to build at a slower pace than normal, which is what we saw this week, you could definitely see natural gas prices continue to rise. And I actually think there are a lot of potential issues out there which could cause gas inventories to rise less quickly than normal. One would be an early start to the summer cooling season. In other words, we get some hot weather early this year. Last couple of years we haven't seen too much in the way of hurricane activity. At least nothing hitting the core areas of the Gulf of Mexico. But that's another concern coming up here in the next few months. As we get more into the Atlantic hurricane season, is there a chance that hurricanes can sort of sweep across the parts of the Gulf which are responsible for most of the natural gas inventory in this country, and we could actually see some of that capacity come offline? Could we see a major pipeline get shut in? Something of that nature could also cause a problem for natural gas inventories. The other factor to continue to keep an eye on is LNG, liquefied natural gas. The EIA is still projecting about a fairly large amount of LNG imports to come into the United States this year. So far we've seen very, very little this year because prices overseas are much higher than they are in the United States. In Europe right now, they're paying 20-25% more for natural gas than we are in the States, even with the recent increase in prices. With that in mind, you're unlikely to see much LNG make its way into the U.S. market. And I expect that situation to persist for a while longer. LNG is becoming a more important swing factor in the gas market. Right now the EIA still has projections for us to have just about 12% less LNG coming to the U.S. this year than we had last year. Now if you remember that last year was a record year for LNG imports, that's looking very, very aggressive in terms of those amounts. In fact, at the EIA conference I attended last week, or the week before last, you actually had the largest player in the Atlantic Basin LNG trade, which is a BG Group, say that that's just totally unrealistic that much LNG would make it to this market. So if you factor that into the equation, you could definitely see gas imports from LNG being much less than expected. Other factors, Canada. Canadian demand for natural gas is rising very quickly, and they're still suffering from a lack of investment in new drilling over the last couple of years. That's starting to catch up with them. That could mean less imports from Canada. The other factors I think that we have to watch on a little bit longer term perspective is what's going on with U.S. generating capacity, U.S. electricity generating capacity. If we look out there right now, utilities are reluctant to build new coal plants right now because they're worried about what the greenhouse gas regulations are going to look like in a few years' time. So a lot of those plants are getting canceled. We had about 17,000 megawatts of planned coal generating capacity canceled last year. And at the same time, a lot of them would like to build nuclear plants. However, building a nuclear plant takes many years. None have been built in over 20 years in the United States. So what we're looking at is a situation where most of that capacity won't come online until at least 2015, probably much, much later than that. So in the interim, how do we meet growing demand for electricity? According to the North American Electric Reliability Council, NERC, some parts of the country, including New England and California, are actually going to see their capacity margins, in other words, the available electric generation capacity that they have over peak demand, is actually going to approach critical levels by as early as 2009. So what kind of plant can you slap up quickly enough to meet that demand? Well, natural gas, that's it. Natural gas plants take about 18 months to build, which is the shortest of any of them. So I see actually natural gas demand increasing a lot faster than what the current projections from the government are. At the same time, there's some serious issues with supply on the LNG front and from Canada. So I think on a short and longer term basis, you've got to be bullish gas. We've seen some of the stocks pull back today after a nice run, pull back mildly, mainly on fairly light volume. And I think now's the time to start looking at some of those names. Companies like Neighbors, which is the largest land contract driller in the world. That's one to look at, symbol NBR. And also some of the producers. I tend to look at producers that have exposure to what we call unconventional reserves. In other words, reserves of natural gas that cannot be produced using traditional technology. That's where all the growth is. Some of you may have heard of reserves like the Marcellus Shale in Appalachia and the Barnett Shale in Texas. So producers with exposure to those fast-growing reserves would be another place I would look very closely. Thank you very much.